Hey, Gil.
Hey, Lauren, can you hear? Oh,
Yeah,
sorry.
that's
Sorry.
okay.
Maybe so zoomed in. How are you?
Good. How are you doing?
I'm good. I'm good. Yeah, we got some people showing up for us today?
Yes, we do. Generally, though, in true real estate agent fashion, they'll probably be here right at 1 p.m.
Yeah, no, that's fine. That's fine. I got on here early. I'm trying to remember. Let's see. How do I share screen? That's how I do it. Okay. All right.
And
Cool.
you have the ability to, right? I
Let me
tried to make sure
see.
participants could.
I think I might be disabled
Okay.
from screen sharing.
Let me see.
I'll try again. Hey, there we go. Yep.
Yeah, I was gonna say, I think I just changed it.
Did it. Yes. Yes.
Awesome.
And where's the screen I want? There it is. Okay, cool. Okay.
Looks like we've got a few folks logging in. Hi, Ann. Hi, Linda. Hi, Philip. So you keeping busy there, Gil?
Yeah, I would say that's pretty generous with, yeah, I just got done with hearings for the day about 45 minutes ago. And, yeah,
Gotcha.
It's a big year. Obviously they kicked the can on values last year, so they're catching up for 2 years of appreciation.
Right.
And, you know, some people are seeing some pretty shocking increases. Some are justified, some not, but a lot of people concerned about TCAD values this year because of the big jumps they're seeing.
For sure. Are you having some luck in your protests?
Oh yeah, absolutely. Absolutely.
That's great.
I always want more, but you know.
Yeah, for sure.
That's the nature of it. So yeah, by and large, you know, there's some pretty decent folks. Some are pretty intractable, and then it's just, all right, well, thank you for your time.
Yeah.
Yeah. But this is the first year we've been able to talk to them, though, in 2 years, though. So because the past 2 years has just been email protests, we didn't really participate in that. It's not super efficient or effective. So
yeah. And I imagine last year, without them raising values, did your guys' business not see as much activity?
Exactly right. Yep.
Yeah.
They rolled values. They threw the tantrum because they got caught buying the CoreLogic data and rolled values. And so, I mean, they can have the sales if they want them. I mean, they're on the internet. Everybody knows what Redfin is.
Yeah.
But that was like a passion play to say, hey, we need full disclosure in the state of Texas, which that didn't work. Surprise. Yep. So they buy them from somebody else now.
Yeah, I know. I figured, I was like, they probably lost one source, but they went and made a Zillow account or a Redfin account, and they're good to go.
I think the place is called Carasoft, and it's like a subsidy of TransUnion or Experian, one of the credit reporting agencies, and it just harvests internet information from like Trulia and Hotpads and Zillow and all those things, and sells it to them. So
very interesting.
Yeah, so they've still got it. Don't worry.
Yeah, no, I'm sure. I was actually surprised on one of mine. The value came in not as high as I was thinking it would.
Oh, really? Oh, well,
so I was like, I'll take it.
Yeah, that's nice. Yeah. The new service provider, they were missing a fair amount of data when they were buying it from CoreLogic. They were on top of it. I mean, obviously CoreLogic, they've got all the data, but the new service provider is harvesting, and so they've missed some stuff, which might have led to a worse value for you. So good.
Yeah. Maybe.
Yeah.
Cool.
Hey, Gil,
well, it's
yeah.
Can I ask a quick question?
Of course.
One of the issues I've had clients reach out to me that they do every year is that these appraisals are based on 2020 values, not 2021. And I think that's why a lot of people aren't protesting or are wondering if they should, because they know what the market is doing now. And so I've kind of made that comment back to my clients.
No, you're exactly right. It's always the previous year's sales data. I mean, sometimes it goes back, you're allowed to go back to 2 years, 3 years, sometimes if there's not enough good data points. But yeah, the market today is even crazier than it was in 2020, but that's not material. Our dialogue stops on January 1st, 2021. So yeah, you're exactly right. And you're telling them the right thing. The current sales not relevant to this year's discussion, but next year, of course.
Cool. Well, it's 1 o'clock, so I think we can get started. Everybody, this is Gil Cowan with Texas Property Protax, right?
That's right. Texas Protax. Yeah.
Hey,
Sure.
Gil.
Texas
Hey.
Protax. That's what it is.
Yeah.
And so he was kind enough to chat with us today for an hour and kind of give us some background on the appraisal process, how we can talk to clients about whether or not they should protest. I don't think we probably want all the nitty gritty details. We just want to be able to talk to our clients about if they should protest. And then if you're willing to share, we'd love to hear a little bit about like the strategies that you use, just so that we understand sort of what's happening in the background when we send a client to you.
Sure, understood. I've got kind of a really rudimentary 101 of how their values are noticed. Should we start? I was going to kind of burn through that, and I was going to send you a copy, Lauren, so that if anybody wants it, they can refer to it later. And
Sure.
and if I'm not addressing something or flushing something out enough, please just yell at me and we'll talk about it. Or if you have a question, because this stuff it's really dry, it's really boring. And yeah, anything you can throw at me to help get us off this really fairly tedious subject would be great.
Yeah, I think as long as we save maybe a little time at the end for questions,
Like I
I
said,
think a lot of us have like, oh, well, this one person, you know.
Okay,
and-
yeah, sure. No problem at all. I'll try and go kind of quick, but like I said,
Okay.
I'll give you guys a copy of it, and if you want to refer to it later.
Perfect.
Let's see here. Hopefully I'm sharing a goofy graphic of a stork. Did I succeed in that endeavor? All right.
Yes, you did.
Okay, lovely. Let's see here. This is new for this year. Your clients want to know where their value comes from. Step one is the class. It's called the class of your house. These change. So this is new for 2021, and this will be the standard going forward. They've switched their old system to mirror like a fee appraiser's class assignments. So a class 6 house is a very modest house. At the other end of the continuum is a class 1 house. It's a very fancy house. Elements of class are how fancy or how modestly or immodestly the house was conceived and executed. A lot of offsets in the slab, a lot of hips in the roof, masonite siding versus 2 inches of limestone. Those are considerations of class. Some neighborhoods have wild fluctuations in class. You see on the east side, very old houses next to very contemporary houses. Some neighborhoods are very consistent. If you were, say, in Pflugerville or Hutto, production neighborhood, you would see the same class house on every single parcel. So when people ask, where does my value come from? First step is look at the class of the house. What class is it? And you can find that information here at the TCAD's website. This is the old designation of 5. So now it's going to be a 1 through 6. It's a little different, but if you're curious about your client or your class designation, just type in your address or the property ID number or your name into the Travis Central Appraisal District website, and you'll be able to see the class designation they've assigned to you. So if you're a 6, your replacement cost, which is where all these begin, starts much lower. Replacement cost is about probably $30–40 a square foot for a class 6. If you're a class 1, your replacement cost is going to be more like $200, $300, $400 per square foot, depending on how big your house is. The next element is depreciation. So if you are a new house, you are 100% good, 0% depreciated. And then what happens is you will tick down very slowly. Your percent good will lower until it hits a depreciation floor, meaning you don't get below a certain level of depreciation unless you show the district you have some sort of adverse condition, like a meteor strike, a water leak, a foundation issue, something like that. And you'll hear people want to know how the value went up, even though the house is a year older or 2 years older, the house is aging. And that's because the depreciation is very slow. The depreciation table that they use is very slow. It takes about 20 years to 30 years to fully depreciate a house in the district's cost model. So you'll be ticking down very slowly in depreciation. Like after you're 100% good, then you'll be 99% good, 1% depreciated. Year after that, 98 and 2% depreciated. So that moves very slowly. There's another variable called the market factor, and we'll get to that in a second. And that's how older homes, even though they're older than they were the year before, they do appreciate. So we'll talk about that in just a second. But depreciation is part of it. You can alter your depreciation by pulling a permit for remodel or updated or additional square footage. If your clients are pulling permits, my counsel is always, if they're the general contractor, tell them to be kind of reserved about what they share with the city of Austin, because the city of Austin feeds those permits to the appraisal district. So you know, a lot of contractors will have an estimate. The work's going to cost $35,000 to $50,000. There's no reason to put $50,000, put 35, and tell your clients when they're pulling permits as well, or their contractor, kind of be reluctant to overshare. Like, you don't want to tell them about the solid gold ceilings you're doing. The district will get excited, and it could adversely influence their tax liability. So you want to just kind of be quiet. But say you were at 70% good, 30% depreciated, and then you pulled a bath permit, then you would lose 5 depreciation points and your value would go up. So that's how they account. A lot of clients say all those homes are remodeled. That is part of the calculation. So if you've pulled an update, you won't be at the base anymore. You'll be nicer than that. So be careful about sharing permit information. And that is part of the calculus that comes into the notice value and to the grid adjustments. Here's a bigger override. Obviously, the slide on the right, it's a full remodel with some structural changes. So that would be a 10% override. If you were 60% good, and then you did that to your kitchen, you would become 70% good, 30% depreciated. That's just a silly little graph of, you know, you go down, down, down. If you pulled a permit, then you would go back up some and then start depreciating again. Land values. A lot of people concerned about their land values this year, and they will tell you, my price per square foot is higher than my neighbor's. The district's position is that's not how we do it, and it's not. We'll get to residential in a minute. If your client is on the water, Town Lake, Lake Travis, their land values will come from a price per front foot. I think this is in town, and this is an older one, but it used to be 20,000 per front foot. So if you had 2 front feet, your land value would be $40,000, because that's how it's done if you are a waterfront property per front foot. That's not available through the website. You can see the total value and kind of roughly back into the unit price by the land value versus how many front feet they have, but it's not, they don't spell it out on the website. It's not explicit. But anyway, the more front feet you have, the more land value you have. If your clients are more suburban than urban, especially more, you know, Spicewood, Manor, Elgin, further out of town, they will do those price per acre. And it's kind of tiered. If you have a lot of acreage, your unit price would probably be lower than if you had a smaller amount of acreage. I'm trying to see on here. Let me blow this up a little. You can see this guy over here on the right. He was 10,000 an acre, and at 230.14 acres, his land value is 2,301,385. This guy on the left, he is 15,000 an acre. His unit price is higher because he has less total acreage. He's only 41.82. So there are tiers to the acreage tables. But again, acreage is only if you're outside of town. If you are downtown, you are on price per square foot. And again, that's what most of your clients are going to be talking about. It's only material to the Travis Central Appraisal District if you are downtown. Anywhere from 70 to, well, this is a little dated. I would say downtown unit prices are more like $80 to $150, $200 per square foot. But again, talking price per square foot only relevant if you are in the CBD, and it's typically just for commercial properties. This is what most of your clients will be talking about. Let me shrink it down a little. How about there? It's a lot. If you have a residential lot, they have a base value assigned for your land. And if you are spectacularly large or spectacularly small for the neighborhood, they might deviate from that. Here on the right, you can see this parcel. He is 4,095 square feet. And the base value, if you have by base value, I mean just the number you deviate from. If you have an improvable lot in this neighborhood, your land value would be $425,000. Now, this guy with the green arrow on the right, he is a little below that. They have said he is smaller than the median size lot. So they have multiplied the base value times 0.85, and that produces the 361,250 land value there. The guy on the left here, he also has the same base value of 425, but he is a double lot, and so he gets a 10% bump for that. So he's not at 425, he's at 467.5. And because these modifiers, they're fractions, right? 15%, 10%. That's why price per square foot never works out. It wasn't conceived, the land values weren't conceived as price per square foot. So if your client tries to back into it by dividing their land value by the number of square feet, it never works. And this is why. Let me shrink this back down. Okay. This is the aforementioned market factor. So you have market factor is assigned by neighborhood. And what it does is it takes the cost estimate. We talked about replacement costs. So your class times the number of square feet times depreciation. That will give you one number. And what they're doing is they're looking at the relationship between the cost estimate that they come up with and the sales we talked a minute ago about the sales from 2020. That's what we're looking at for 2021. And they're looking for a pattern. If they see that their cost estimates are under the sales prices, say the cost estimate from their computer is $300,000, they're going to look at a known sale from 2020 and see what did it sell for. If it sold for $350,000, they know their cost estimate is low. And then this other variable called the market factor is going to raise that cost estimate up to 100% of market value, or as close as they can get. That's their statutory target, 100% of market. So market factor, this is how, when people buy more for homes, this is how the neighborhood goes up in value. And this can go up a lot faster than the tiny depreciation table goes down. So when people say, hey, my house is older, that is true. The depreciation table should account for that. But then what do the recent sales look like? If they were higher than those estimates, then you'll see an increase in the market factor. And that's just the math behind it, how you calculate it. They're looking at all the sales they have access to set this number. They're not just looking at one sale. It's the whole body of sales. Assessed versus appraised. A lot of people get confused on this one. Assessed is used interchangeably with taxable, and that's the number multiplied by the tax rates to produce your tax bill or your client's tax bill. The assessed value is your appraised or market value minus any applicable exemptions. Homestead exemption, over 65, disabled vet, whatever it is. And the assessed column is capped at up to 10% from one year to the next. So a lot of people want to know why their appraised or market value went up 25, 35, 60% in 1 year. That's because there is no limitation on the market value, only what they think is logical and defendable. But the assessed value can chase the market value or appraised value at up to 10% from 1 year to the next. And that's important because some people, especially this year, have spectacularly different assessed and appraised values. And the conversation with the district is always about the appraised value. You can only argue the market value. You don't get to argue the assessed value. So if you had, say, a 20 or 30 or 40% difference between those two values, going to protest might not be worth your time. If your market value is $500,000, but your assessed is way down at $300,000 because of your homestead cap, you would need a correction of greater than $200,000 to even begin changing the client's tax bill by the first dime. So it's important to recognize the way this limits any potential success. If your client's looking for advice and they have an assessed value that's very different from their appraised, and your opinion is the number, your real world number is not lower than the assessed value, it's of limited utility to go and argue. If you were at 500,000 market, 300,000 assessed, and you had a good campaign for 400,000 in the middle, that's great. You might win that award of $400,000 in market value, but their assessed value will remain $300,000, and it will not mathematically alter their tax bill. So it feels good. You get a discount. That's great. But if the purpose of the exercise is to lower your client's tax bill, you've got to change the appraised value to below the assessed value. If that's not within the realm of possibility, probably don't go waste everyone's time.
So Gil, real quick, that's kind of, I think, a hot button one right now, because people are seeing their market value go up so much.
Yeah.
Essentially, it is not worth anyone's time to try to get that number lower. Like that does that benefit the homeowner in any way at some point in the future?
Arguable. There's a few wrinkles to it, and they are this. In 2020, we talked about, they rolled the values from 2019. So if you received a discount in 2019, they said, here's your discounted value again in 2020. So if they pull that trick again, then yes, there is merit to lowering your appraised value. Now, I don't know that they're going to pull that trick again. When or if they do, then yes, there would be merit to lowering your appraised value to a number above the assessed value this year. Because if they say, here's your discounted value again, then it would be lower. You would be noticed at the 400,000 instead of the 500. Another thing is you don't have to hear, well, the value was good enough last year, which I'm not saying that you're going to hear that at the appraisal district, but some of the more difficult people will say, well, you didn't protest last year. Why are you mad now? It didn't go up that much. So it saves you from having to hear that, not that you will. And if they roll values, it would be of benefit to you. And some people just want the number right. And if you're one of those people that's like, this is crazy, I just want to fix the number, I don't care if it saves me tax, that's fine. I mean, that's certainly within your rights. But most people want to change their tax bill. And if you can't make the market value go below the assessed value, you have not done that. One other wrinkle, one other caveat is, maybe we talked about class and depreciation and land value. Now, those are recurring characteristics from year to year. Maybe you think your class is overstated. Maybe you think your depreciation is overstated. It's off. Now, there is merit to going, even if it's not going to fix your assessed value to a lower number, there is merit to go and talking about correcting the characteristics of your property. Excuse me. A lot of people have, like the district will estimate the size of their house because they didn't go inside. And so maybe you have like a 2-story foyer and a 2-story living room, but they've got the area over the living room and the foyer as second floor. So your square footage is reflected bigger than it actually is. There is always merit to going and fixing that, because your assessed chases appraised at up to 10% from one year to the next. And you want it to catch up to your property accurately described, not overly described. So if you have characteristic corrections, by all means, go talk about those, because that will pay dividends ultimately if they lower some designation associated with your property. When the wheels turn again in 2022, you might be calculated as a 2,000 square foot house, not a 2,300 square foot house. And if everything else was the same, that notice value would be lower, which would help your cause. So There is some merit to sometimes arguing for a number above the assessed value, not always. So,
Gil, I have a quick question.
Yeah.
You were saying that the characteristics, what are those characteristics that you might argue?
The characteristics are the class of the house. That's how fancy or modestly it was conceived and executed. The depreciation table. What am I Am I considered to be in average condition? Am I considered to be in fair? Am I considered to be updated? And size. Those are the big three: class designation, size, and depreciation are the biggest three that influence. Well, and land value too. Those. Yeah, go ahead. Sorry.
2 follow-ups. The depreciation table, where can we find that?
Oh, I can tack it. I'll send it to you. I'll tack it onto this thing. I don't have it on there. They just changed it again this year. So there's a brand new depreciation table for 2021, and I'll append it to this little PDF that I'm going to send you guys later.
And the other thing is regarding land value. I think what we know a lot here in Central Austin is that a large number of trees that can't be removed can greatly affect land value. I mean, I would think that that might be worthwhile to have that argument, although I see land values way below what they are.
Yeah. So I haven't seen, I mean, I understand the limitations of heritage trees, and out here in the real world, yes, that's totally a thing. I haven't seen it win. And I've been to board hearings with a City of Austin arborist who testified on behalf of my plaintiff and said, hey, the utility of this lot is not as you describe it. There are heritage trees here, 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 and here. They cannot develop that FAR ratio because of the limitation of these trees. And the districts, they were successful and have been successful for several years at just poo-pooing that and completely brushing it off. I haven't seen it win yet. Again, I'm not saying it's not real. I know it is, but I haven't seen the board decide to accept some consideration for that. Sadly.
Thanks.
Really quickly, this is another one that confuses a lot of people. I talk about this all day at my office. The homestead exemption versus a homestead cap, not the same thing. And it really throws them for a loop. So the homestead exemption, you have to be there on the 1st of the year to get a homestead exemption. You have to live there January 1st. And if your client lives there on January 1st, cool. Tell them to get their driver's license to say that address, and don't claim a homestead somewhere else. Those are the 3 prerequisites to being awarded your homestead. Okay. And then what it does is, you can see down here, this is an older tax bill, but oops. Different taxing jurisdictions like ISD and City of Austin, Travis County, they offer different exemption amounts. And if your client has their homestead, then they back off the notice value. So you can see here the notice value was $310,200 for this property. In Austin ISD, because it's a homestead, they back off $25,000. So $285,200 is the number being multiplied by the tax rate. So it saves you some money. Sometimes it's a percentage, sometimes it's a flat amount, sometimes the greater of the two. It's perplexing. But if your client qualifies for a homestead, by all means, entreat them to get that paperwork in. It does save you some money. Now, what it also does is this, and that is your client could become the beneficiary of a potential homestead cap. And that's what we talked about a little bit earlier, and we're seeing a lot of it this year. Market value, as we know, or appraised, that can go up any amount, logical and defendable. But after a property has been your homestead for 12 months, if the market value goes up over 10%, the assessed value can only chase it at up to 10%. So hypothetically, let's say your market value goes up 20% in a year, then your assessed value would go up 10% one year, and if nothing else changed, 10% the remaining year, and then they would be the same number again. So your clients don't always have a homestead cap. It's only in years where the appreciation has outstripped the 10% assessed value limitation. And then the difference between those two numbers is your homestead cap. So you'll say people all the time saying, I have my homestead, but I don't see my homestead cap. That's because the mathematical relationship of those two things is just such that their increases have been less than 10%. So the assessed value has been able to catch up to the appraised value every single year. But a homestead cap and homestead exemption are different things.
Can you explain again when the homestead cap is triggered?
Yep. Okay. So let's say your market value goes up any amount over 10% in 1 year. So market or appraised. If it goes up 11%, that's more than the assessed will allow it to increase. So if you say you went up 11% in the market value, that's allowable because it's market. Then what would happen is your assessed value would chase it by 10% 1 year. And if nothing else changed, your assessed value would go up 1 more percent the year after that. And then it would be the assessed value would go up 11%. It takes it 2 years. And that's because the market value went up over 10% in 1 year.
But that's assuming that the next year it doesn't go up another 20%.
That's also true. Yes, ma'am. Yes, ma'am. That's exactly right. And you'll see people, there are people that have not paid on the market value of their property in 20 years. And that's because they live in rapidly appreciating neighborhoods and they enjoy the protection of a homestead cap. So they are forever trying to catch up to that number and they never get there. And God bless them. I wish I was so afflicted.
Okay, thanks.
Sure. Let's see what else we got here. Clients, this is a gross overstatement, but it's a good rule of thumb. Clients that bought their house in 2020, if they paid more than the notice value in 2021, please counsel them to call an expert or stay home. If your client just paid $500,000 and the district's at 450, they will not entertain any dialogue about a lower number than the sale price established the previous year by the listing agent, the buying agent, the appraiser, the underwriter. They're just not going to do it. They will not talk to you. They will not negotiate if they're below your sale price. And as I mentioned before, they have most of the sales this year. They're missing a few, but they have most of them. If your sale price is below the notice value, that can be a very easy case. And it's as simple as sharing your settlement statement that was signed by the title company with them and say, hey, I had a market transaction. There was exposure, willing buyer, willing seller, all that good stuff. And I purchased it for $450,000, not $500,000, the notice. And that will typically go your way without too much difficulty. So they got a low sale price. Typically it's fine to just show it to them. The one caveat I would add to that though is if your sale price is spectacularly lower than the notice value, 10%, 15%, 20%, it could be that one of those characteristics that we discussed earlier is overstated. And it would be a good idea to rope in somebody that can look behind the curtain and say, hey, guys, I've got a sale way down here. And I think the square footage is overstated by 17% based on a sketch I have. And so it would be good to correct those characteristics so that when their next notice value comes out in 12 more months, that error doesn't persist and their notice value next time would be a little bit lower. So if it's super different, maybe don't just show them the sale price, maybe review the characteristics. But if it's, 5 to 10% below, the characteristics are probably fine and they can just do it themselves by showing the appraisal district the settlement statement. It's pretty easy. If clients want to know how to fill out the form, the big 2 boxes are over market. That means it wouldn't sell for that, and unequally appraised. Those are the 2 defenses the district will automatically summon. I wrote on there on the bottom, you also want to say, if your clients are protesting, they want to request the taxpayer evidence package. And if you click the first 2 boxes and request the evidence package, the district will send you their evidence before your formal hearing date or your client. And they'll say, these are the comparables we considered for sales, and these are the comparables we considered in an equity analysis. And that gives you some time, or your client some time, to kind of pick apart the sales and say, well, this is not a good comp for me because of X, Y, Z, But the big 2 are market and equity, and that's the first 2 boxes. You want to click those and then ask for a copy of the evidence package. Let's see. Now, e-file, E-file is just their electronic protest system where you don't actually interface with anybody. You say, I think my value is X. They say Y. And you say, because I'm looking at these sales. I don't really recommend e-filing. It's a little impersonal. It's a little easier for them to say, no, be gone. Unless you have a closing statement from the previous year and it's cut and dried, in which case e-filing is fine. But it's a little impersonal and it will not produce your best outcome typically.
Hey, Gil.
Yeah.
Real quick, I think Steve has the question. Steve, do you want to ask your question?
I'm so. I forgot about the hand, Steve. I'm sorry, man. Go ahead.
Yeah, the hand.
The hand.
Is the appraisal district hearing panel restricted to the properties that were sent to you in the evidence packet, or can you show up prepared to defend against those comps and then they have a new batch when you?
Complicated answer, Steve. It's like this. 2 years ago, the answer was no, they cannot. You have asked for the evidence. They have to provide it to you 14 days before your formal hearing date. It doesn't have to be in your hand before the informal date, but 14 days before the formal date, they have to show you what they intend to present. And that used to be an argument I have all the time, like, do not deviate from this evidence you've shown me, or I will object and raise heck and cause a scene. The cloud that hangs over that was a House bill that passed 2 years ago. And this House bill had a very vague interpretation of rebuttal evidence. What is rebuttal evidence? Some of the more aggressive TCAD staff have taken this to mean anything is rebuttal evidence. So some of them, their interpretation is, I can just throw the phone book at you to sustain your value, and that's okay under, I can't remember what the Senate, or it was House bill, Senate bill 2 maybe? Oh, good. Anyway, 2 years ago, these waters were greatly muddied by a Senate bill or a House bill that says it was a very, it vaguely defined what rebuttal evidence was. So they would show you their evidence. And then if you said something else that looked like it was going to prevail, then they would just bombard the appraisal review board with new evidence. And so there is a case. I don't think this has actually been settled in a court of law, to be honest, Steve. It has not. I don't think it's been tested. So my position would be, if you were in that position, to say, panel, I or my client was not provided the information the district's attempting to share 14 days ahead of time, and I object to its consideration. We weren't given these comparables as potential evidence, and I do request that we follow the rules and discuss the original grid. Make sense? But they're not supposed to, but some will try. And your recourse is to object, and promptly.
Can I ask a question?
Yeah.
I've been doing CMAs, what I call CMAs, for owners who want a DIY protest for like 25 years.
Mm-hmm.
Used to go down there and do some for clients myself.
Mm-hmm.
I generally bracket the closed dates between June 1st and January 31st of that following year. And that's generally been okay. Is that still kind of, because we're saying, what was the, if I was going to list that property for sale, what was its market value January 1st of that year?
Yeah, so, no, that the window's a little wider than you've been using, Steve. If you're doing June through January 1st, that's a tighter window than the district. Man, they don't really distinguish between January of 2020 and June of 2020. Now, you could make a case, my comps are better than yours because I am closer to the effective date of January 1st. But if there's a sale from January, February, March of 2020 that helps you, I wouldn't hesitate to share that with the client either.
Okay, thanks.
Yeah. Mm-hmm.
I have a question too.
Yeah.
My client got his packet of properties, and I had run a set of comps, and I run mine based on lot size, square footage, similar home condition,
Mm-hmm.
And neighborhood.
Yep.
And when we got theirs, they were outrageous. They were not a similar year. They were not, and they had all these adjustments. And I'm curious as to why they wouldn't take the simple answer of homes within a neighborhood that are similar in size, lot size, condition.
Now, I think the difficult answer is because that undermines the entire institution that is the Travis Central Appraisal District. Like really, like their script is pretty well defined for them. Their neighborhoods are pretty well defined, and the neighborhoods that what they call a neighborhood is a group of properties that travel up, down, or not. They don't travel at all, but they move as a group. And the district, if you have to play by their neighborhood definition. If you don't, that's a problem. They won't heavily consider your comparables. And sometimes your neighborhood is not your neighborhood. The house next door to you might not be in the same neighborhood as you because it was built after 2000 and you were built before 2000. So sometimes it's gerrymandered in weird, non-intuitive ways, and it's what they think is right. Now, I think there are some reasonable people that would have responded maybe a little more positively to a presentation like you're describing, like, hey, these are close, these are similar. But some people, particularly new people on their staff, are much more reluctant to deviate from the script. And right now their staff is very, very young. The residential department, it's been 24, 36 months of a lot of haggling between our institutions and their institution, and a lot of their seasoned people have left, a lot of new people. So as much as you can stick to the script that is comps within the same neighborhood, I think that will further your cause.
It dumbfounds me. They'll have like, this is a 1950s home, pier and beam, and they'll have something on slab, new construction, and you're like, and then they make all these adjustments, which gives you no understanding whatsoever.
Yeah.
The house 2 doors down that didn't include.
Yeah. So, but considerations like slab versus pier and beam, not really part of their calculus. They're fixated on size, class, depreciation, and land value.
Okay.
That's where they're going to be putting their focus. Year of construction, some of the smart ones know, oh, let's not comp a 1990 house to a 1950 house. But some of the others, newer people might just say, hey, the depreciation's similar. That's a good comp.
Interesting.
Yeah.
Thanks.
Yeah. Let's see. Again, e-files, I'm against them. I don't think it's, I mean, if your client just wants to throw something at the wall and say they protested, e-file's great. It will not produce their best outcome though. Again, if they have a sale price from the previous year, then e-file's fine. Tell them to upload their closing docs and they'll be taken to their sale price without too much trouble. The typical doors to appeal, market appeal. That's saying, hey, my house wouldn't sell for that based on some hopefully comparable sales you've developed and can share with them. An equity appeal is the notice value of your subject property. How does that compare to the notice value of other homes in the neighborhood? So equity appeal has nothing to do with the market value. It's the opposite, just how are you noticed? And then the third door is, are your characteristics correctly described? Is the square footage right? Is the class designation right? Is the depreciation table right? Like, is there a case to be made there? This is a sales grid. And you've probably seen these. This is what you would get if you clicked box 1 on the protest form, property is over market. They're going to show you, typically it's 4 comps. It used to be 5, now it's 4. And what'll happen is you start at the sale price. You can see right here, the comp, first comp in the grid, 2235 East 6th, number 220, sold for 305. So you would start there, and then the aforementioned adjustments, that it would go through these machinations, both positive adjustments if the comparable is inferior to the subject, or negative adjustments if the comparable is superior to the subject. and then it would produce an indicated value. So you can see here, comp 1, it looks to be a model match. They are both 1,018 square feet. It's in the same neighborhood. It's built the same year. Its class is 6. And so there are no adjustments there. And your value result is the same as the sale price, 305. And so this was noticed up here. Let's see. Noticed at 325, 957. So this comp favors your client's outcome at the bottom there. You can see it's done at 305. Comp number 2 here, sold for 299. It is 1,003 square feet. So it's a little bit smaller than the subject at 1,018. And that's this tiny adjustment right here, upward 1814. So you've got that adjustment. You've got a tiny land adjustment. I don't know what that's about, but 299 plus 392 plus 1814, it gets you to 301, 206. And then the third comp is over here. What'll happen is if you have, it will go to the median value. The median of these three is comp number 2, 301, 206. So literally the number in the middle is going to be the value indication. And that's a market grid based on recent sales. Equity grid, exact same thing, except it begins, okay, how do I get rid of this? Oh, mercy. There we go. Equity grid. Oh, I can't. Sorry, y'all. I don't clear these stupid squiggles I made. I don't use Zoom a lot. My apologies. Equity grid, exact same thing, except it doesn't start at a sale price because equity comps are not necessarily recent sales. So it's the notice value of those equity comps versus the notice value of the subject. And let's see here. So subject was noticed at 517, 532. You can see that market value over here. I guess I'll annotate some more. Maybe it'll come to me. I can figure out how to get rid of it later. There's the notice value, 517, 532. Here's an equity comp from the neighborhood. Positive adjustment there for class, negative for depreciation. Anyway, it was noticed at 511, 925, comes out to 517, 277. So again, it's all the same adjustments. It just doesn't start from a sale price. It starts from the notice value. Equity grids typically help more later in the season because properties that have been reduced during appeal, and there are thousands of appeals that will probably go before you, then what happens is these notice values get lowered. It runs through all the same calculations and your indicated value is lower. So equity grids more helpful later in the year. Early in the year, equity grids typically do not help. Let's see here. Okay. Oops. I'm sorry about my squiggles, y'all. Equity appeal, how do you pick them? You got to figure out your neighborhood. Let's go. At the district's website, there's your, so I have searched for my equity comps by saying, all right, who looks like me at the appraisal district website? And you make sure that they're from the same neighborhood. You can see here that Z76600 is the neighborhood code. If your equity comps are not from Z76600, then you are in a world of trouble. They won't listen to you at all. They'll just say, huh, those aren't in the neighborhood. No can do. So you want to know if your equity comps in the neighborhood or not. You want to know if your sales in the same neighborhood or not. That's how you double check it. Go to the Travis Central Appraisal District website, look up your sale, look up your comp, and make sure that neighborhood code dovetails with your subject's neighborhood code. That will greatly ease your pain. You want to bring them some sales. Typically, what I ask people to do is make it easy on them. Print the one sheet and put the property ID number on there because MLS uses the old property ID and the district doesn't use those. The big long number up here, PID, you can see it up here. Oops, never mind. Anyway, they don't have the, you want to use the 6-digit PID. Make it easy on the appraisal district to add your evidence by going ahead and looking it up by the address at the website and saying, hey, 5925 Green Acres is PID 273205. That'll put you way ahead of the game. because all they have to do is key in the 6 numbers, and they're more likely to consider your evidence the more spoon-fed you present it to them.
Question.
Yes, sir.
When we bring in evidence, MLS maps, do they add that into their database and now that's fair game for them to use? So,
Typically, no, they don't. And if they already have the sale, they might already be aware of it, and that's fine. They will use it. If they don't have the sale and you're bringing it to them and showing them to them for the first time, some people, hopefully they'll consider it, but they will not enter it into their database. So subsequent protests, unless they also introduce that same piece of evidence, it will not be waiting for them. Yeah. People who have condition issues, you know, you have a client, oh, I've got a problem with this, I got a problem with that. It's a twofold thing. And what that would do is if your client has some actual physical detriment to their house, documenting it, take a photo of the room, a representative photo of the room, and then offer more detail if you like. The mistake most people make is they have super duper close-ups of chipped paint and cracked wood, but it doesn't really give a sense of the house. And so close-ups are fine, but those should be secondary or tertiary evidence packages. Show them a photo of the house too, or they're going to assume that you're hiding something. So here's the room, it's dated, and here inside the cabinets, I had a plumbing leak or whatever. Now, photos are step one. Some of them will dodge discounting your property's depreciation based on photos. This is step two. If you have a bid for repair, in appraisal speak, that's called cost to cure. If you can say this, it's really good if you can say, look, my roof is hideous. Here's a photo of my hideous roof. And by the way, I have a bid for $8,000 from so-and-so roofer to repair the property. That avoids the dodge that is, Mr. Cowan, I'm not a roofer, I don't know how much that'll cost. If you can spoon feed them, it helps. So condition issues, show them photos, representative photos. And if you've got cost to cure, that's even better still. Give them both. Going to the formal hearing, say you don't, informal is first, you can't reschedule that. They'll say, hey, your informal is X date and X time. And if you can resolve the appeal then, that's great, you're done. If you sign a number at the informal, that appeal is over. Obviously, the deadline's the 17th, Monday. It's a little extended this year because the 15th is on a weekend. So deadline to file a protest is this Monday coming up. If you don't resolve it at the informal, you'll want to go to the formal and tell your clients or tell yourself, bring 5 copies of any evidence you want to hand out. There'll be 3 board members, 1 for you and 1 for the appraisal district. If you're not making both cases, market and equity, you could say, I withdraw my equity protest. If you just want to talk about market, sometimes that helps expedite things and helps the appraisal district stay focused on what you want to talk about. So if you clicked both boxes on the protest form, market and equity, but ultimately you only want to talk about market, you can say, hey, I withdraw my equity. So let's not waste our breath on that conversation. This is obviously very dated. Formals this year are not going to be at the Expo Center. There are 18 panels for live hearings at the appraisal district's new building at Anderson, and it's 183 and 35. They've got a big new 4-story in the northeast corner there. So the appraisal district's not on Cross Park Drive anymore. So they'll have 18 live panels, socially distanced this summer, and they will try to force you into having a phone hearing where you can share information digitally if you've uploaded it. It's kind of onerous, but yeah, that's the way it is. It's a phone hearing where you can share a screen, kind of like I'm doing here with your evidence. I would say if your client is vaccinated or you are, I would probably say go live, go to the board, because it's harder to say no to you in the flesh than it is on the telephone, where you're just a disembodied voice. And yeah.
Well, I have another question. The deadline is May 17th.
Yes.
I have a client that purchased in 2020, and there's nothing showing on TCAT, and they have not received notice.
If they purchased in 2020, I bet a lot of money the notice went to the seller. And so if
It's not,
I'm
it's
sorry?
not showing on TCAD that it says NA for 2021,
In A, what says in A?
not applicable. There's no new values.
Huh. Do you remember the address?
I do 6404 Dry Cliff. And 2019's value was super nice and low, and we don't want to rock the boat.
Mm-hmm. Let's see, 26 or 6404 Dry Bend. Did I get that right?
Dry Cliff.
Oh, Dry Cliff, excuse me. Ah, there it is. You are correct. The NA is because they have not noticed that property yet. Does it by chance have it doesn't have a historic exemption, does it?
No, and they have their homestead exemption was actually added.
Okay. Some properties get noticed later than others. If they have not received their notice, their deadline it will be 30 days after they receive it. So their deadline is not May 17th or it's not May 17th for them because they have not been noticed. It might be a good idea to just file because you don't know when it's going to come out and it avoids the conversation. You can file a protest for it before Monday, or your client can. I'd say go ahead and do that. Just file the protest. And then when they get the notice, they don't have to attend. There's no black mark against their record if they don't actually follow through on the protest.
So another small wrinkle is that a couple of other property tax protest companies have sent them notifications about a value, and they've all used the same value, but it's not. We dip into their data, and I can see a number that the district's number right now is for that parcel is 903. Okay, that's what we're all hearing. Yeah.
Yeah, that's the number in the system. However, until they notice you at that, you don't know that that's exactly where you're going to be arguing from. But that's the number they've got tentatively. Apparently, they're still tinkering with something about that value or that neighborhood, and they haven't committed to it yet. But that's what they're toying with is 903.
Okay, but go ahead and protest, and then if their value, if it comes out as to higher than what they paid.
Yeah.
Okay.
I think I can see what they paid. So
yeah,
if they get noticed at 903 and
they should be quiet.
You know they paid 977.
Right.
Yeah, that's great. They have a good problem. They don't need to protest. They don't need to hire somebody.
Okay.
Stay home and save everybody some aggravation.
Okay, and if it goes higher than that, they'd simply take in their closing documents.
You got it. Yes,
perfect.
Exactly right. Exactly right.
Thank you.
What not to say? I'm not trying to be a jackass. It's just these things are either overused or abused, and if you say these things, it's like it turns their hearing just shuts down. Price per square foot. You and I know I'm a real estate broker. I understand price per square foot is relevant. It is real. Please don't say that to them. Don't say price per square foot. They'll say immediately, we don't do price per square foot. And that's because they have their convoluted class times depreciation plus land. So just don't say it. We talked about CMAs. I wouldn't use the phrase CMA. I wouldn't say, they get real dismissive. Oh, a broker just gave you that so you can get a discount. I would say I have trolled the internet, or my agent has found some comparables for me that I think are material to the value of my house. Don't say CMA. They'll think it's just a shortcut. Cracks in the driveway, they don't care. Landscaping, they don't care. So clients that lost trees in the freeze or whatever, that's not really relevant to their math. The yard slopes, don't bother unless you have a serious grading issue and some sort of bid to repair it. A messy neighbor, unless you have a sale also adjacent to the messy neighbor and you can point to that comp and say, hey, I think I'm overvalued. I have a messy neighbor. This other house that abuts the messy neighbor sold for much less than your estimate, then you would have a case. But if it's just a slobbed out neighbor, they're not going to respond. Don't say my taxes are too high. They will immediately tell you, we don't do taxes. We do market value of properties. Taxes are the comptroller technically. So we know they're related to it, but don't say anything. Don't talk about your taxes. Talk about the market value of your house. You guys, I would not, I'm a real estate agent. I would maybe drop that much later in a conversation if you have already established a rapport. Not you guys, but other real estate agents have gone in there, and some of them were less than well behaved, and the insinuation was that you're ignorant and backwards, and there's a little bit of animosity residual there. So, you know, you can say you're a real estate agent after you've already established a rapport and be like, hey, I have some working knowledge of this field. And the last is average. The tax code and all the language is predicated on median, and median's the one in the middle. So don't say average. That's a red flag for them. They'll immediately think, oh, you're speaking gibberish. We don't do averages, we do medians. So you would say the median of my 4 comparables is X. And so just, it's a stupid vocabulary thing, but it will help your cause to say median, not average. Let's see if I got anything else here. Okay, that's it. That's it. That's it for me. Like I said, I'll send you a copy of this, or I'll send Lauren a copy of this, and Lauren, you can, if anybody wants it, they can have it.
I have a question.
Yeah.
And both on properties that I've owned and that I've done back when I did it for clients, when they let you come in and do it at the informal, which was like way back in the 90s.
Mm-hmm.
There could be an attribute of the property that the appraisal district would accept. For example, I owned some lots in Granada Oaks, and they were about an acre, and some that I owned, the entire back half of the lots were in a floodplain. They were still buildable, but you had to build up closer to the street, and you could never build back in the floodway or the floodplain. And they would accept that, and they would reduce the value, but that acceptance never seemed to be persistent. The next year, they'd pop right back up, and I'd go down and make the same argument. They drop it again. Are there some attributes that are permanent on a property that they can change in the system that remain persistent, and that you don't have to go back and re-argue year after year? Or is it that way for every single successful attribute?
No, we talked about the value of arguing recurring characteristics, even if it wouldn't get you below your assessed value, right? And your case is exactly that.
Oh, I can't relate. Did you already? You don't have to go over it again if you talked about it earlier.
No. I was going to say, so in your case, what they could have done, and what I would petition for, is say, hey, the code for flood influence is letter T. Now, you wouldn't know this, but that's the way to permanently fix this problem. You say, hey, look, I've got a flood comp sale, and it didn't fetch what you guys did, what your notice value was. It didn't sell for as much. I think that's probably because it's in the floodplain. Mine are also in the floodplain. Could we consider the application of a flood discount to my properties so that I don't have to come and bother you good people every 12 months? And what that would do is they would say like T 0.85 for a 15% discount, or whatever, you know, whatever allocation they think it is. When the cost tables run again the next year, you're going to pop back up, but then you pop back down because it considers that discount for flood, which you talked about the year before.
So is there a publicly available list of those things?
No, sir. No, there is not. There is not. Just tell them what you think the nature of your complaint is, and let them find the code for it.
Okay.
Yeah, there is not. But flood is T. Whatever you think the initial would be, it's not that initial. That's the rule.
Gil, you mentioned you would send the where to find the depreciation.
Oh yeah. Yes.
All right. Just
I'm going to
remind me.
stick it on the end of this little page right here. I'll put it at the end, and so you'll be able to see like what it's a little across and down. So you have to know your class and then what condition you're in, and then you go across and down, and that'll tell you your depreciation floor.
Perfect. Thanks.
Yep, no problem.
I didn't
Anybody
follow
else?
the whole outcome of that dispute between ABOR and the appraisal districts. So am I understanding now that they have full access to the MLS for sales data?
It's not full access as far as I can tell. So they, CoreLogic, they got kicked out of CoreLogic, which of course, like it's a non-disclosure state. I don't know what they were thinking when they bought into it anyway. But I mean, that was a coup for them. They were very excited. So ABOR says, get out of our data, which is fair. It's a non-disclosure state. And they're now buying, I think it's called Carasoft is the provider. And I think it's a subsidy of, it's either TransUnion or Equifax, one of the credit reporting agencies. And I think what this place does is A, they charge a lot more than CoreLogic, and B, I think it trolls the internet, like real estate websites, and it kind of makes a composite report of transactions. I'm sure it looks at Redfin, Trulia, HotPads, and says, all right, there's definitely a sale here. And then what they do is they sell that to the appraisal district. Now, that is, they get most of the sales, but I have seen I'd say they're missing about 20% this year. So I don't know if that new provider is going, if their service will be improved or they'll continue missing about 20% of the sales. But when they were buying it straight from CoreLogic, they had 100% of the sales, but the new provider charges them a lot more, and they have missed a fair number of sales, in my opinion. So they don't have them all, they have a lot.
Could it be that they get them from TransUnion and those, so they don't get, I had a client one time say a cash buyer would be happy to get this property because it won't be reported to the appraisal district. Is it somehow based on them getting a loan that they're getting that data? And that's maybe why the 20% are missing, that they were cash deals?
No, I mean, I have seen, like, these were just conventional finance through the MLS. It would have been a lot of sales that I would have expected them to find, but they just missed them. Now, cash deals or stuff that's not through the MLS or stuff that's through Austin Luxury Network, they miss all that. I mean, they don't get any of that. But yeah, I think this data farmer just missed a fair amount of stuff, which, you know, that's sometimes good. There's some sales I don't want them to see, and they miss some of them, and that's good for everybody.
One more quick question. You don't spend a lot of time on it because it's a very unique situation, but one of my friends had a house fire and she'll be out of the house for a year, and it's like probably $400,000 or $500,000 that the insurance company will cover. Should she just go through someone like you and not monkey with it herself? And could she get a discount for the 1 year?
So we talked about the effective date earlier, and the tax code is very clear. What's the condition of the property on January 1st? And this is a terrible, I mean, it's just, this is the way it is. If the house was there on January 1st, 2021, the district's position is going to be, too bad, so sad, pay your taxes. Now, if the house is still diminished or not there January 1st, 2022, she absolutely has a case to say, hey, guys, my house burned down. I have no house. Now, for 2020, I would say her best bet is not to hire me, because I'm a data nerd. I'm the guy arguing comparables and cost tables and all this gibberish. She has a personal story. She's got a tale of woe. Send her with photos of the house just looking abysmal, burnt to a crisp. Send her to the formal hearing. Informally, they won't negotiate with you, but send her to the formal hearing and have her make an appeal to the board. Like, she's got a personal story that's better from a first person narrative. Like, she will say, guys, tax code says January 1st. I get all that, but I don't live in my house. My house burned down. Please look at the photos of my house. Please offer me some relief. And I think that's probably this client's best bet for some sort of relief. Now, by the letter of the law, she's not entitled to it, but that doesn't mean you can't go and ask possibly sympathetic appraisal review board for some help.
Got it. Thank you.
Yeah. Anybody else? I think y'all have heard enough.
Yeah, that was great. Thank you. Thank you very much, Gil. That was super informative. Everybody, I'll disseminate the information he sends, and I've also done a recording of the class so we can reference it in the future too.
Awesome.
Thank you.
Thank you, Gil.
Hey,
Thanks, Gil.
thanks for hanging with me, y'all.
Appreciate it.
Thank you.
Bye-bye. Lauren, I'll email you.
Sounds good. Thank you.
Okay.
Have a good one.
Hopefully I can figure out how to get the squiggles off there. Thanks.
All right.
Bye-bye.
See ya. Bye.